I'm sick and tired of people saying, oh, house prices are up and, the housing market's doing great and it's going to keep going up and up and up and up. I don't know about that because let's get into the numbers. So, lending has tightened. So, this is the first thing I'm going to say. Yes, lending has become stricter, and the mortgage lenders require more paperwork, more documents, ask for more information. They want to see more stuff. If you're a mortgage lender, let me know, what are your processes like? Did they get harder in the last year or two than they were a few years ago? So let's get into the video. Why that might not be the case. Okay, and economic severity. The deeper and the longer the recession, the more likely is that home prices could decline as prolonged economy struggles and impact the consumer. Yeah, the longer the American consumer is struggling to get a job, they're employed for longer. The bank wants to see a certain amount of time period where you've been working. They want to see history, right? They want to see, oh, you got to show 2 years of pay stubs or W-2 so you know that you're making money. And rightfully so. But the longer the recession, this recession's going to take, the harder it's going to be on all of these people trying to make ends meet and trying to buy a house. So, unemployment rate. Here we go. High unemployment rate can reduce the number of potential home buyers and increase foreclosure, leading the lower home prices. Yeah, the more foreclosures, and these houses will then and investors aren't going to buy them up because they also are strapped for cash, because foreclosures normally don't happen when everybody pays rent. So if you're an investor and you have a house and you're all good, but your tenant stopped paying, you can't go to the bank and be like, yo, my tenant stopped paying rent, let's just pause the mortgage rate. If you're a mortgage broker, let me know if there's a possibility of doing anything like it. I've never heard of it. So the landlord eats that cost. And I own a rental unit, actually 2 rental units. And if one of them stopped paying, I'd be like, okay, I can still, fund, use my own money to pay the mortgage to kind of get them evicted and to kind of keep the boat afloat. But if both tenants decided collectively, we're going to stop paying, then I'm going to be really screwed, because then I need to use a big portion of my money to keep my assets afloat. And then what everybody else is saying, real estate's the way to go. Real estate is king. Real estate is the best thing in the world. Real estate appreciates. It's an asset. All of a sudden, that asset turned into a liability. I hope it's not like that. But for all these people out there in recessions, these assets can really fastly turn into liabilities. That's why some people say, oh, I only do stocks, because stocks are liquid. You can trade them, you can sell them, and it's a quick in and out. And you get the money in your account guaranteed. And with a tenant, they have rights. Your stocks do not have rights. Your stocks, they'll sell, they'll trade, and you're done. You're done. You get your money, whatever the trading volume is, you sell, you trade, you do things, and bam, you're done. But if your tenant decides to not pay rent, there's laws. And depending on if you're in California or Nevada or Florida, there's laws that protects these tenants. And some of them, they have these laws because some of the landlords abused it. And now we're in a place where they can be in your property for a very long time without you making money. So if they band together and say, oh, let's just stop paying rent, then they're struggling. Then the landlord's going to struggle. And that might have a ripple effect where one asset is going to be so heavily financial burden that it might tear down the house of cards, even if you put down 20-30%, because you just don't have the means to support it, right? So interest rates. People always say, oh, just, date the rate and then you refinance later. That's a whole bunch of nonsense. Those are the people that speculate on crazy stocks and say, oh, we're just going to date the rate and then down the road, we're going to refinance. Who knows when that is? That might be in 13, 14 years from now, where the rate's going to be back at 3%. And let me know your prediction if when you think the rates are going to come down. Jerome Powell said it's never going to come down, but I don't think it's going to come down to the high 2s, low 3s again. I think it's going to be 4.5, somewhere around there, where it's a semi-decent, healthy interest rate. But right now, it's just high prices. And I don't think that the interest rate right now are too bad, but people haven't adjusted. People think that they're selling their property's worth pure gold, and they want low cap rates, and they want big dollars for their rental properties because it's a supply and demand type of industry, right? So if you have a bunch of people trying to live in one area, then the house prices go up. But if you have everybody leaving that area, because who knows, if that one company that hired everybody went out of business, then you can buy them cheap. And that's kind of what happened to Detroit, Michigan, when all these motor companies kind of went out of business. So yeah, it's crazy. So government in interventions, physical policies like, yeah, stimulus payment, mortgage relief programs. Yeah, they have those. But let me know in the comments below if you ever utilized one. And because I don't know people that utilized one, I don't know if they would tell me either. So that's might be an interesting one. So supply and demand in regions with housing shortages. Yeah, house prices can go up. House prices can go up a lot with supply and demand. So if you are looking at a one-story house in Las Vegas, 3,000 square foot like I have, that's really hard to come by. So people are willing to pay a premium. But now you're in an interesting dilemma because people like me with a 3%, I think I have 2.9 or 3% interest rate, I cannot sell my house right now and rebuy or upgrade because interest rates are so high. I couldn't afford my house today as if I'd sold as I could a few years ago. So I'm pretty much stuck. I have the golden handcuff, like Steve Jobs likes to say. I could not buy another place and have as good of a mortgage rate and all that. And even though my house appreciated a lot since I bought it, all these gains that I would have and wouldn't make a dent into the same house as I bought. So it's really, really interesting to see how the golden handcuffs not only work with stocks, it also works with mortgages. That's why assumable mortgages are a thing where people just try to assume somebody else's mortgage and try to try to trade or something like that. But it's a bigger problem for people that are trying to move. I'm always wondering why don't they rent it out and rent another place? Because if you have your house, right, and you're trying to find a new place to live, and maybe you moved recently, why don't you rent your house out now and then buy something later down the road? Rent your house out that you're currently in right now, try and make a profit and rent at the new spot. Because my equation goes somewhere like this. My mortgage on my house right now is about $3,000 with property taxes. I could probably rent it out for $4,500, $5,000. So that'd be about a $2,000 profit if nothing goes wrong. So I think I could with Allison, not a 3,000 square foot house, but I could probably rent like a 2 bedroom, 2 bathroom for about $2,600. So my out of pocket pay would be $600 to rent that nice apartment. So I could do that, and then I have the flexibility of it. I have my tenant paying my mortgage. But the only problem that I see is that if that tenant stops paying, then I need to come up with $5,600, and that would be hugely, hugely costly to me because paying that much out of pocket, I don't think I could afford it. Frankly, to be honest, because you also have living costs, you have other investments that might need some cash injection. So I could do it for a few months, but if they're going to be, not paying for a few months and then destroying the property, then you're really, really hurt. But what you can also do is you can also vet them really good, and there's always a risk to any investment. And yeah, why wouldn't people do that? That might be the reason. That's the only reason why I could see, because if it works, great. So I did not have that problem yet with any of my tenants or any of my properties so far, because I always let them. I have a little bit below market rate, so they're really grateful that they got that place. I'm really trying to work with my tenants if they're short or if they need a few extra days. I don't take on late fees. I'm really trying to work with them. that probably wouldn't work on a big scale, but on a small scale, like a small kind of landlord, that's that would work out. So that is very interesting to see how it can rack up, like real quick. Because if that would happen to me, and if all my tenants stopped paying it, I rented out my personal house, I'd have $10,000+ worth of mortgages that I need to pay, and I don't have that money laying around to pay these mortgages. So that would drain my account real quick, and I would have to find a solution really, really quick, trying to get back on track. And it's really hard to recover from setbacks like that. So if a tenant doesn't pay and destroys your property, it takes very, very long to get back to on a positive track, right? So for my property, I calculated out, on my rental, I make about $1,600 profit a month. But just replacing the air conditioner is a 2,000. They're the wall units. That's a $2,000 type of deal. So I didn't make any profits for 2 months, for that whole time that I owned the property. So if you look at it, and that has my rental has each side. So it's a duplex, has 3 air conditioners on one side and 3 in the others. So and it costs about $2,000 to replace it. So that's about $6,000 in air conditioners, and that is about what I make in profit in 6 months. So if they go out or something happens, I haven't seen $1 in 6 months. And then if something else goes wrong, then I have to pay even more money. So it can catch up with you real quick. And that's why I sometimes understand these people that don't keep up their properties. They just let them degrace, and just put no money into them. Just take the money out and let it stack up, and then let somebody else have the problem down the road. And I get these people because it can be tough, but I'm trying not to be like that, because I do value my property. I do think I want to give my tenants a better life. I want to bring them up with me. I offer them a little discount. I think I'm $150, $200 cheaper than my competitors, but I get to pick the best tenants, and then I help them out. And in return, I'm really hoping that they would pay on time and not just screw me over, because then that would cause me huge problems down the road. Let me know if that seems smart, if you would do it too, or if I'm an asshole landlord. Let me know. I'm here for the conversations, and I'll see you in the next one.